We're going to flash the forecasts of some of the sell side on the street here for next year growth forecast. Okay. I'm just wondering what you make of where people think the economy will be next year.
I think most people are going for 5%, but I think the major difference would be in the first half. Obviously China surprised everybody by reopening in a very sudden, abrupt way. So I think in the next couple of months, the infection cases is going to go up, and therefore it's going to disrupt production. It's even going to disrupt consumption as well. So because of that, the first half, could be anybody's guess. But then, things should start to recover in the second half. So I think 5% would be a nice sort of a round number to look at for next year.
But as we continue to see more of these cases pick up, I'm just wondering, are you confident that the economy can continue to reopen at the pace that we're seeing so far?
We're way past, the point where we can sort of, lock down everybody because, now the cases, number of cases substantially higher than the official number, obviously. If you're in Beijing, basically, if you look at the WeChat friend circle, everybody is showing, 2 strikes on the rapid antigen test. So I would say that, we will pass the point of no return. So now it's just, how fast we can get over the first ramp. And then according to overseas experience, there tend to be like 2 waves or even 3 following the first big wave. So it really depends on how fast we can get over this.
Now, the expectation is, and I was looking at earnings revisions in markets on MSCI, it seems like we've bottomed and we've seen revisions start to pick up. If we'll hit a soft patch in the economy in the next 4 months, are markets overly optimistic about an earnings bottom being behind us?
I think earnings growth is about to bottom. All right, so but really
it's about to bottom.
About to bottom, but it's not yet. But I think if we're going for 5% for next year, then it's quite likely that according to historical correlation, then you should get close to 10% EPS growth year on year. So and I think most of the growth will be concentrated in the second half of next year. So I wouldn't say that the market is too optimistic. The market is still in a mood to repair much of the damage being done in October, right? So we have a huge sell-off in October, and now we're just sort of trying to get back to normal.
We've been talking about this kind of rotation out of credit, out of government bonds into the equity market, and you're starting to see more signs that authorities need to step in to buy bonds. Does that work in stabilizing the market in any way? I
think if you look at the wealth management product market, right? So some of the WMPs actually down close to 20%, on a weekly basis. Right? So it's a very substantial drawdown for one of the safest financial instruments in the Chinese market. So the government has to step in. So that's number one. And I think point number 2 really is that we've seen this movie before, right? So there are episodes in the past where we've seen, plunge in WMP's value, and then the government come in to rescue, and then things come back to normal. So I think there's still a lot of instruments that the government can deploy, right? So expansion of the PSL, for example, lowering the interest rate further, and also cut RRR further. And all of this is going to work over time, but for now, because the COVID case is still rising, we're still, getting hit by the first wave. So, all this easing policy is not being very effective just now.
Yeah.
Well, I was going to ask, I'll use that as a jumping off point. You just put a note this morning I got in my inbox.
Yeah.
QE.
Yeah, China's
QE, yeah. A lot of people are talking about
Well, I mean, does China need QE? And why are we talking about that now?
Yes and no, right? So it really depends on, how fast can consumption recover, right? So if you look into next year, you're not going to see exports growth as strong as the first half of 2022. Investment sort of shaky-ish, right? So government doesn't have a lot of money to spend, right? So all that's left is the Chinese consumption. And Chinese consumption is hit this year, because people just don't have jobs or incomes or prospects, right? People are being locked down at home. All right, so I think going into next year, if consumption is not coming back fast, then there is a chance that we can distribute consumption coupon like what
Like
we did here in
Hong
Hong
Kong,
Kong, right? So we give 1 trillion yuan worth of coupon and let people spend it, and people will feel happy, and then gradually confidence kind of come back, et cetera, et cetera.
And there's a lot of debate about, this whole reopening story is positive for equities, for the renminbi as well, but there's also that tourism outflow that could happen once China reopens, the narrowing of the trade surplus as well. Is it good or bad for renminbi, you think?
In a way, as long as economic growth comes back, it's going to be supportive for the yuan. And that's why I think, even for the currency market, right, so the yuan has strengthened substantially from 7.4 at the lowest point, to now below 7. Right? So, there is a chance that, as we go into next year, as people's confidence starting to build, capital flow coming back to China, then I wouldn't be surprised to see the currency strengthen further from here.
Very quickly before I let you go, 20,000 on the Hang Seng Index.
Alpaca suit.
Well, no, the bet, just to clarify, the alpaca bet was 30,000.
30,000.
Llama.
We need to work harder then.
Yeah, do I get into a llama costume? 25,000 a year at Hang Seng.
25,000 before year end?
Yeah.
That is...
8 days, roughly.
Yeah, even though we hope so, but it's unlikely.